Bitcoin is worth now 31.5 ounces of gold per Bitcoin. And we are only 8.9% of gold's market cap. If Bitcoin is to equal gold, that implies a Bitcoin of over $1 million. If Bitcoin is the better version of gold, the digital version of gold, the future's gold, we have millions and millions of dollars worth of Bitcoin, tens of millions of dollars worth of Bitcoin. The established sequence: gold moves up, it outperforms Bitcoin for weeks or months while BTC quiet or drops. 2, gold's outperformance over Bitcoin begins to slow and then reverses. 3, Bitcoin catches up and vastly outperforms gold and other assets. If this gold BTC cycle plays out like previous ones, we've entered number 2.
The markets are sending a message, loud and clear. In 2025, the two hardest assets on Earth, gold and Bitcoin, are leading every major asset class. Gold, the ancient hedge against fiat collapse, and Bitcoin, its digital successor, are now side by side at the top of global performance charts. It's not just a coincidence, it's a signal that confidence in traditional money, debt, and policy is fading fast. For decades, gold has been the ultimate refuge when paper burns. But what happens when the refuge itself has a rival? Bitcoin has begun repeating a familiar pattern Mallers calls the gold Bitcoin cycle. First, gold outperforms while Bitcoin cools off. Then, as confidence in fiat erodes further, capital rotates. Bitcoin catches up and surges past everything else. According to Mallers, that's exactly where we are right now. Phase 2. The quiet before Bitcoin breaks away. This isn't just another bullish call, it's a reflection of the broader economic reality. Fiscal dominance has arrived. Governments are spending far beyond their means, and central banks can't raise rates without crashing everything. That's why both gold and Bitcoin are screaming higher. It's not about speculation anymore, it's about survival. Two assets, born in different centuries, are now leading investors through the same storm: the slow death of the dollar system. In this video, we'll break down Jack Mallers' urgent analysis of this new gold-Bitcoin era, why it marks the beginning of a historic monetary reset, and how it could propel Bitcoin to levels the mainstream still refuses to imagine. If you find these breakdowns valuable, make sure to like this video, subscribe to the channel, and turn on notifications so you never miss updates on the next major move in crypto markets. Thanks, and enjoy the video.
First chapter, the charts don't lie. Okay, this chart from Charlie, guys, it speaks for itself. It speaks for itself because I hear all these people on the internet, they say, well, didn't Bitcoin not necessarily outperform Ethereum if you clicked on the chart here and then there? Or wait, what about that one time Dogecoin went up a lot? Listen here, okay? Listen here. You want to prosper? You want to have family? You want to be able to afford a home? Stop listening to TikTokers. Stop doom scrolling with all the low testosterone out there. To all these day traders driving Lamborghinis telling you they know how to pick stocks at the perfect moment. Wake up, touch grass, look at this chart. Bitcoin returns from 2010 to 2025. That's a 15-year track record. 15 years. Look at this chart. Holding Bitcoin, you've had 3 red years of 15. People ask me, dude, how do you do it? How do I do what? Win so much? That's what you want, Mike? You want to ask me a question? You're going to ask me how I just do green, 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 green. Look at that. 9,900%, 1,400%, 186%, 5,500%, 35%, 125%, 1,300%, 95, 301, 66, 156, 121, 27%. The king, the fastest horse. I'm telling you, the charts don't lie. This next one, gold, which is up 48% year to date, Bitcoin up 31% now, are the top performing major assets so far in 2025. We've never seen these two in the number 1 and the number 2 spots for any calendar year. In the 15 years Bitcoin has been around, gold and Bitcoin have never been 1 and 2. I'm going to say that again. Gold and Bitcoin have never been 1 and 2. What does that imply, guys? This is the new monetary era. I see all of these finance bros, on all of the social medias. You got all these social medias where you got all this opportunity to spew all this nonsense. And they say, oh, you see that? You got some dude in an empty closet ranting about Bitcoin. This is the top. Who the hell is that? He must be in his mom's house. Yeah, okay. This is the end of the beginning. We are just getting started. And if you don't want to listen to me, that's fine. You can click on a different YouTube video. But I've been right for 13 goddamn years. Bitcoiners have been right for 15 years. You can no longer ignore the charts. The charts are the truth. And if you've got gold and Bitcoin leading for the first time in the asset's history where they've been operating together, that screams fiscal dominance. That screams fiscal emergency. That screams a new monetary era. That is a rotation out of the US dollar and US assets, guys. I cannot put it any clearer. I cannot put it any clearer. The charts do not lie. And I fully expect Bitcoin to rip and surpass gold as the top performer this year. Okay? Let's get into that. The established sequence. This from Macroscope, which, by the way, one of my favorite follows on Twitter. If you do not follow him at Macroscope17, he is an absolute gem. The guy shoots like 99.9%. I don't know who he is. Unbelievable legend. Also loves El Salvador and all the work that I've done there. The guy's unbelievable. Unbelievable. Shout out Macroscope. And with this tweet, of course, he's right. The established sequence. Gold moves up. It outperforms Bitcoin for weeks or months while BTC quiet or drops. 2, gold's outperformance over Bitcoin begins to slow and then reverses. 3, Bitcoin catches up and vastly outperforms gold and other assets. If this gold BTC cycle plays out like previous ones, we've entered number 2. We've entered number 2. You guys know this has been my belief as well. And it's not a belief like a religion. It's not a belief like a bias. It's a belief because of experience, guys. I've lived this. This is the data. This is why this chapter is called The Charts Don't Lie. You got to deal in objective reality, right? Look at the data. Look at the numbers. Do the math. That's all this all is. Wait, how much debt do they have? Huh, okay. Wait, how many more Bitcoins can we print? Oh, no more? This is it? Ah, yes, right. Number go up. It's math. Objective math. Next, the fiat debasement trade goes mainstream. Okay? Trump came out and said, you grow yourself out of debt. What does that mean? We're going to run it hot. There's going to be no austerity. There's going to be no magical Elon cuts and Doge. There's going to be no magical other countries are going to pay our bills through tariffs. We're going to grow ourselves out of this debt. That means we're going to print the money. We're going to run the economy hot. Real rates are going to be negative. That means Bitcoin is going to the moon. That is what we are seeing. Guys, when you see stuff like this, growth out of debt, that means inflationary. For all my Gen Zers out there, that means buy Bitcoin. That means their inflation is coming back. They're going to have to run it hot. They're going to have to print more money. They're going to drive the prices up of these things. Make sure you get yourself some Bitcoin, okay? Bloomberg wrote US gold hit $1 trillion in value. With gold reaching record highs, the U.S. gold stockpile has never been worth more. And I thought it was very notable that Bloomberg wrote this piece. But this is the type of shit, guys, where people are saying, oh, well, this must be the top. Bloomberg is writing about how high gold is. Gold's going to crash now. It's been going up for too long. It's like 3 straight months of green gold. Oh, this is the top. Did you see that all the... No. Want to know how I know? This is the market value of U.S. official gold as a percentage of foreign held U.S. treasuries, U.S. debt. Guys, we're at the bottom. Tops in gold are when the market value of U.S. gold is like 40% of foreign held U.S. treasuries, or 60% of U.S. held treasuries, or 125% of U.S. held treasuries. So if gold were to go on to hit $40,000 an ounce, okay, yeah, it might be a top. because the percentage of gold reserves relative to foreigners owning our debt would make sense.
Mahler's message is simple but cutting. The charts don't lie. The numbers reveal a story that narratives can't distort. 15 years of data showing Bitcoin as the undisputed winner of the modern financial era. Yet now, something historic is unfolding. For the first time, gold and Bitcoin, two assets born from distrust in fiat, are rising together. That's not a coincidence. It's a signal that the global economy is entering a new phase, one where faith in government paper is collapsing and real finite assets are reclaiming their dominance. But as Mahler points out, this unusual pairing of gold and Bitcoin at the top of the leaderboard doesn't mean parity. It means transition. Gold always moves first, quietly absorbing the flight from fiat, while Bitcoin lags before ripping past everything in sight. This time, that same sequence is playing out again. Gold's run has slowed, Bitcoin is coiling, and fiscal reality is catching up with politics. Because when the charts show both gold and Bitcoin outperforming simultaneously, what follows next is always the same. The moment when politicians start redefining growth as money printing. And that's exactly where Mahler's turns next, the fiat debasement trade going mainstream.
The reason I know that gold is not at an all-time high, or not at a top, it is at an all-time high, it's not at a top, is simply because if you look at the gold value relative to the debt situation, listen to me clear, guys. This is what matters. It's all relative. I know that we're not used to things going all-time high after all-time high after all-time high after all-time high. But this is the new normal. The dollar has to crash. It has to go down against assets. The debt is out of control. The post-1971 dollar is dead, guys. In 1971, the U.S. government divorced themselves from the gold standard, divorced themselves from having to have any relationship with Mother Nature. You know, back in the day, you couldn't print dollars because you couldn't print gold that backed it. But now they can. They started that in 1971. It was an unsustainable situation. And it's just unraveling. We're just getting started. Look at this chart. This implies that, yes, the U.S. government's gold position is now worth $1 trillion. It could grow to $10 trillion. It could grow to 20, 30 trillion. They could grow their way out of the debt, like Trump said, where the gold on balance sheet is worth 20 trillion. The Bitcoin on balance sheet is worth 20 trillion. Now, what is a dollar worth in those scenarios? No, the dollar's probably not getting you much gas. It's probably not getting you much food. It's probably not getting you much housing. But Bitcoin and gold will, for sure. Sats will get you what you need, for sure. For sure. For sure. Right? You guys picking up what I'm putting down? De-dollarization accelerates. If gold reaches roughly $5,500 to $5,700 an ounce, all else being equal, it will overtake the dollar as the world's largest reserve asset. Tokenization will further enable gold's integration into the global trade and finance, Gresham's law. The dollar's monopoly is ending, guys. I don't know how else to put it to you. And people think that we can do so. Back in 1980 to 2000, Paul Volcker, he was able to slam on interest rates, so hike rates up, and really pause what was becoming an explosive gold rally after the 1971 divorce from the gold standard. People think that we could go back to that. People think that we have a variety of tools in the toolkit that, oh, gold is running away. Oh, Bitcoin's running away. Oh, stock market just keeps hitting all-time high after all-time high after all-time high. They're not going to let this happen. This is the top. Sell before the next FTX bust. Guys, listen, I'm not here to say what's the top, what's not. You guys know I don't trade. I stay humble. I stack sats. I'm not here. This isn't a trading show. That. Sorry. Just not me. Hard work, principles, morals, family, health, humble, stack sats. Okay? I just buy the Bitcoin no matter what. I wake up every day. I work hard. What's the best place for me to store my hard work? So far, it's been Bitcoin. I'll wake up tomorrow. I'll make that same decision. So I'm not here to call tops. But what I will tell you is this. Mainstream media the greater West, majority of America, Europe, the West at large, they do not appreciate that an existing chapter is closing. The game has changed. I'm telling you guys right now, the game has changed. The gig is up. We need to start thinking in relative terms. Gold is becoming the largest reserve asset in the world. Gold is not even 20% of foreign held U.S. treasuries for gold on the U.S. balance sheet. Bitcoin is only $2.5 trillion. Bitcoin is still worth less than certain companies like NVIDIA. We are not even close. The beginning is ending. From CNBC, the retail investor crowd has a new trade it is chasing. It's fueling Bitcoin and gold rallies. They literally published that the debasement trade is Bitcoin. The bank is in reference to Chase Bank. The bank defines it as a trade that, quote, reflects a combination of factors, which in our client conversations range from elevated geopolitical and policy uncertainty to uncertainty about the longer-term inflation backdrop to concerns about debt debasement due to persistently high government deficits across major economies to concerns about Fed independence to waning confidence in fiat currencies in certain emerging markets in particular and to a broader diversification away from the U.S. dollar. This is Chase Bank, reported by CNBC, about how the debasement trade has gone mainstream. Things like inflation, debasement, these are common knowledge terms. Let me explain, because I recently learned that a lot of younger folks, Gen Z, listen to the show, and maybe sometimes these terms or these ideas aren't super well understood, because at the end of the day, it is a lot of hocus pocus garbage, and it's a lot of unnecessary complication, this financial system. So here's the deal. If the US government is in debt, which we all know they are, unsurmountable amount of debt, ridiculous, like no one thinks they can pay it back. They know they can't pay it back, right? So the US government's in $37 trillion worth of debt. Okay. Now, typically, for a normal person like you and I, anyone who's in debt has two options, only two. One, they could pay it back like an honest person. If I'm in debt, $20. I can pick up the phone and say, hey, where do you want to meet? I got your $20 I owe you, right? Pay it back. My second option is I can default. I can pick up the phone and say, hey, I don't know if you're ever going to want to talk to me again. I'm so sorry. I know this is going to impact our friendship, but I'm defaulting on the $20 I owe you. I simply can't pay it back. Those are the two options for any normal person when they're in debt. What you guys have to understand is that the US government uniquely has a third option, unique to them, because they can print what they owe. You understand? They can devalue what they owe. And time again, we know the US government cannot afford to pay it back. We mathematically know they can't. We've walked through the economics on this show. They also cannot default. They can't pick up the phone and say, guys, in fact, a default would actually be the most bullish case for Bitcoin. If the US government said the dollar's dead, we're moving on to something else, Bitcoin would go to $1 million tomorrow. The only option, if it's a multiple choice, the only option they have is to print what they owe, devalue the debt.
The short-term price action this week is a textbook example of how conviction and volatility coexist in a repricing regime. Bitcoin blasted to an intraday record around $126,198, then retraced to roughly $121,000 as headlines about a U.S. government shutdown, now on its seventh day, and partisan gridlock spooked risk-takers. That pullback saw profit-taking and forced deleveraging. Glassnode showed profitable supply slipping from about 99.79% to 99.29%. Open interest dropped and liquidations jumped, roughly $151 million total, with longs taking the bulk. In plain terms, Institutions and long-term holders are accumulating beneath the surface, while short-term traders are getting flushed out during headline shocks. At the same time, real money is moving into hard assets, exactly the dynamic Mallers has been warning about. Gold pierced $4,000 per ounce, and capital visibly rotated between gold and Bitcoin as some traders trimmed Bitcoin at extreme profits and hedged into metal. Crucially, this rotation is happening against a backdrop of robust ETF demand. Bitcoin ETFs attracted roughly $3.24 billion this week, and Ether ETFs $1.3 billion, pushing Bitcoin ETF net assets to approximately $164.5 billion, and Ethereum ETF assets $30 billion. Those are not retail pump-and-dump flows. They're sticky, institutional allocations that function as a structural bid under the market. Put another way, headlines trigger noise, but the plumbing of long-duration demand has already been built. Breadth inside crypto is also telling. While Bitcoin digested gains, BNB climbed to new heights, testing its previous all-time high near $1,330 and up over 46% in the last month, showing active capital rotation within the ecosystem toward utility and on-chain usage narratives. That kind of sector strength matters. It widens the market's base, draws fresh liquidity, and underpins valuations beyond pure macro hedge money. Yes, rallies like BNB's carry upside and risk of a sharp mean reversion, but they also demonstrate that capital is not fleeing crypto wholesale, it's reallocating within it. So what does this all mean for Mallers' gold to Bitcoin sequence? The headlines today, shutdown fears, a transient Bitcoin pullback, surging gold, and dramatic ETF inflows, are the mechanism of the rotation he describes. Political dysfunction raises doubts about the dollar's stewardship, pushing allocators into hard assets. Gold moves first, Bitcoin follows, and long-disciplined institutional demand provides the lift when sentiment flips. Expect more headline-driven volatility, liquidations, sharp intraday swings, but also expect the structural forces, ETF accumulation, tokenization, and fiscal debasement, to keep the path higher for Bitcoin over the coming quarters. If those flows continue and policy uncertainty deepens, Mallers' view that Bitcoin moves decisively past gold, this cycle becomes not rhetoric, but a plausible market outcome. If you found this breakdown useful and want to stay ahead of the curve on Bitcoin's next big move, make sure to like this video, subscribe to the channel, and drop your thoughts in the comments below. Thanks for watching.